All right, I'm doing this tutorial for all family, friends, everybody who I've pretty much discussed this with. So I'm gonna pretty much give you the breakdown. All right. So this app is called Robinhood, right? So first you got to download the app, do all the information. All right. So I'm gonna start from scratch. I'm gonna tell you how it is that stocks works. Okay. So I'm doing this more as for saving. You know, it's not a get rich scheme or anything like that. It's got to be looked at like long term. You know, it's got to be something that's a long term investment for yourself. So I'm gonna break it down from scratch. So let's say that you got a piggy bank, right? And you go and you put $50 in that piggy bank, right? Like an old school piggy bank that you got to crack open when you need the money. Now, if I put something in the piggy bank, $50, if I take that out a year later, if I crack that a year later, it's going to be the same exact $50 that I put in there. Now, with investing in stocks, that same $50, if you play it right, that could be $80, $100, whatever. A year later, 2 years later, it might grow to $500. You know what I mean? So that's the difference, is that you want to see a percentage increase on your money. Now don't let this fool you because it's showing, oh, like I dipped down. So let me give you an example. So originally I started with like $48, $49 or whatever, right? So in my piggy bank, right? It's somewhere back there. Like $49, something like that I started out with. So now that $49 is $81.42. So that's a 40% increase on my money. So the same $49 that I put in that piggy bank is no longer, when I pull it out, $49, $50 bill, but it's $81. You know what I mean? So that's basically how stocks work. Okay? So let me give you a greater example. All right, let's look at some of these companies. Now, with this app, what you do is you can search up a company. So let's search up a company like Chevron, just as an example, right? You look it up. If you want to follow Chevron, you put it on your watch list, right? So I would click this little plus button up in the corner here. Bow. I put it on my watch list, and now I'm following it, right? So with these stocks, you can look at the progression of the stocks within a 3 month time frame, 1 year, 5 year, 1 month, 1 week, 1 day. Okay, you can make money in 1 day. You see the trend going up, I'm fucking with it. That's what I've been doing lately, is within a few days, riding a wave, taking my money out. Okay, it with part of the stocks I'm investing, I might have some of my other money in a long term. So let me give you an example. So when you invest in long term, so let's go look at this Chevron so I can show you how it goes in your watch list. So here's the stocks I have right now. Here's the stocks that are in my watch list, right? This is something that I want to keep an eye on. All right. So let me just show you where it ended up. So Chevron, I just started following it, so it's going to be at the bottom of my list. Right there, Chevron. Okay. So let's take a look at a company like, well, shit, Amazon. I mean, let's look at Amazon. If you have the ability to see trends, like, oh man, I knew that was going to be a big idea. Oh man, I knew that YouTube was going to go somewhere like me. I used to know all these things, but you got to put your money where your mouth is. If you have the spirit of discernment that you're able to see these trends, then why not put your money where your mouth is? You know what I mean? So let's say 5 years ago, oh man, that's a great idea. I'm going to invest in that. Right now, one share of Amazon is worth what? $1,887. You see that? 5 years ago. When the stock 5 years ago, Amazon stock was at $372. So that same $372 that you put in the piggy bank, that one share, when you pull it out, it's no longer $332 or whatever. It's $1,887. This is how these rich people make money. Now imagine that's just one share. What if you bought 10 shares? Let's do the math. Let's do the math. Okay, so let's see. So let's say you bought at $332 a share times 10. Let's say you bought only 10 shares, let's say. So you paid $3,320 and you got 10 shares. All right? Now, what was it, like 1,800 and something? So now each one of those shares is now worth like $1,880, right? Is that what it was? So $1,880 roughly times 10 equals $18,800. So you spent $3,000 to get you 10 shares, and now you got close to $19,000. That's the way this works. Okay, because you had the ability to see that this company was going to be on the upswing, that they were going to make it, right? So let's go. All right, so let me give you another example. All these I'm watching, obviously. So like Snapchat ain't been good for me originally. I bought into it and I got out of it because it's so wish-washy. Now everybody is using Snapchat. That's why originally I had invested in. But reason I pulled out is because their company is trying to figure out a way to make money. How do we have millions and millions upon millions of users? How can we utilize those millions of users to make money? Well, they're going to the lowest common denominator, which is advertising dollar. So when they switched up the format of Snapchat to where you got to look at NBC News or this news or that news, people rebelled because they want to just see their friends' stories. But don't count it out yet. They might figure out another way to make money because they have the potential to make the money because they have so many users. I would just say right now, I'm not, until I hear any news coming out of the company on how they're going to make money, then I'm going to be iffy. But when you buy it, when it's at its low, Snapchat might now be $7. That's extremely low. What if it ends up being as high as one of those companies like Google, Twitter, whatever? That $7 that you invested is going to be what, 5 years from now? It's newly on the stock market, so it's going to be a little shaky. It doesn't even go back, I don't even think, definitely not 5 years. It barely got introduced on the stock market at $27. Motherfuckers lost money. Look, March 3rd. So until they figure out and it get on the upswing, it's at a really low rate right now. 7 is the lowest I've seen it. You know what I mean? I'm going to let it go, hit rock bottom, and then I'm going to hop on it once I hear news out of the company. Now, in this app, you can even go and keep up with the latest news, because investing in stock is investing in a company, and if you're investing in a company, you need to know what moves they're making. Okay, so let's go back to I made some money off of oil. Which oil company did I make? I forget because I play it like from day to day, sometimes from week to week. But I know one of these companies. Which one was it? PayPal's another one I'm watching. It kind of came low right now. I would say I want to get it like at $79, but I'm not even working with those big companies right now. I'm working with like smaller ones. The oil industry is booming right now, so you gotta hop on those waves. Let's give a few more examples of what I'm talking about as far as long-term investment. So when Netflix came out, right? Remember they had Redbox? Now, when I seen Redbox, I was like, fuck, man, why didn't I think of that idea? You know, Blockbuster went bust, all this shit. Who thought of that idea of Redbox to put it outside of a McDonald's or a gas station? They made bread. But quickly thereafter, you had Netflix come out. Now, if you were to be able to say, you know what, this is going to be a money maker right here, and you would have put your money where your mouth is with Netflix, let's check it out. Don't pay attention to the day-to-day swing of things. You got to look at it more from a long-term standpoint. So Netflix came out, $50 a share, let's say, okay? $50 a share. Let's say you buy one share. Let's just make it basic. You buy one share. That same $50 that you put in the piggy bank in December of 2013 before Christmas, now you go in that piggy bank and it's worth $350. Let's say you bought 100 shares. All right, let's go to $50. $50 a share in 2013 times 100. You spent $5,000. Instead of putting $5,000 in the bank, you said, you know what? I want my money to work for me, not me to work for my money. You put $5,000 down on Netflix, right? 100 shares. What's it right now? $350. So let's say $350 times 100 shares equals what? $35,000. You turn that 5,000 little punk ass dollars into $35,000 since 2013. You know how time flies, right? So instead of a savings account which don't do shit for you, you could even go to your bank and say, "Hey, I want to buy a CD and all this shit." That gives you what? 2% raise on your money? What do you think the bank is doing? They're investing your money in stocks, making money, and giving you a measly 2% off of it. You know what I mean? You the sucker in the situation. Okay? So how do you think these rich people been making money all these years? You wonder how can they go and do all this shit and have a good time and go on vacation when I be working my ass off? I don't see how they do it. Well, this is most likely, unless they involved in some illegitimate activities, this is probably how it's being done. Now let's look at a company like HIMX. All right, they're like a chip maker for Apple phones. So if Apple's doing good, they're gonna do good. I can't afford to buy an Apple stock right now, so I might fuck with them because I know if Apple's gonna do good, they're gonna do good, right? So let me go down to the United States, evil empire. War is profit. That's how they make money. You know, if you're inclined and you know that, instead of running off on all these conspiracies, why don't you make money off the shit? Lockheed and Martin is linked to the U.S. government, is linked to the war pigs, right? So I don't agree with them. I hate them. It's contrary to what I believe in, but to make money off the enemy, hey. So let's take a look at Lockheed Martin, which is tied in with war, okay? They don't miss a step. Where are they at 5 years ago? It can't look back 10 years, but let's say, so they're like at $111, probably $100 when they came out, $100 when they hit the stock market. Now they're at $347. Look at that, past 5 years. That's a 227% increase on that money that you put in. 220%. Go to the bank and they're going to give you 2-3% at the most for holding your money in there for 6 months or whatever. That ain't shit. Let's take a look at some other companies. So the companies that I've been, and mind you, I only started off with $49. I know that ain't shit, but the reason I did that was to test my own self and how I invested and see what I can do and what I can't do. You know what I mean? It's a kind of trial and error. But I'm still up, what, 40% since then. Okay? And it's just getting a feel for it, right? So let's say, let's look at, you got to look into these. I've looked into every one of these companies. So Intrepid Potash. I'm in southern New Mexico. I know the oil field's booming. This company is actually, it doesn't have anything to do with oil necessarily. They have to, I forget what material it is that you can read up on the company. Operates test segments, agriculture market, fertilizer. That's what they do, right? So they have this land and they produce fertilizer, potassium, woo woo woo, right? But what a lot of people don't know is they sitting on a whole lot of land while they're trying to make money off of fertilizer. And you have the shale oil boom in southern New Mexico. And guess who's sitting on all that land? Who happens to be sitting on water? You need water to for the machinery. You got to wet it up in order to drill for oil, and they have all the water rights to that. So it's small little things like that when you dig deep, you say, oh shit, they sitting on all that land. You know, it's little things like that that's going to make you some money. Let's look at Planet Fitness. Everybody agrees people get memberships and don't ever fucking go to the gym, but as long as they get their fucking money right, where were they 5 years ago? They probably only been on the stock market not even 5 years. Nope. See, when did they come on the scene? Probably in 2013 or something. Not even. 2015, Planet Fitness came out. If you were to type them, $12. Wait. Yeah, about 13. Let's just roughly $13 when they first came out, right? $12.75. Boom, $50. Now, that's 293%, almost 300% increase on your money. So let's take that little measly $12.75. Let's say you bought 500 shares. Oh, you spent something good, $6,375. That's tough to have to invest that money. Okay, to buy how many shares? Would I say 500? But what's 50 times 500? You spent 6,000 only to that 6,000 now 25,000. Am I making my point? Are you seeing where this is going? Okay, so now because I'm not working with big time money, I could be invested, which I'm gonna start doing, investing more money in it. But I've just been playing it so that I can and see the trends and see what works correctly and what works incorrectly. Okay, so look at this Yuma company, 39 cents a share. That ain't shit. Could you imagine if that 39 cents? Look at when this company rolled out. I bought it like, what, a week ago? It was lower than that. It was like way down here. I mean, that don't seem like a lot, but the more shares you buy, you know, the more it's worth. But look at when this company first came out. Damn, people lost a lot of money. $97 it came out, and now it's down to 39 cents. This company has nowhere to go but up. You know what I mean? Nowhere to go but up. What's 39 cents? You know, fast forward, they get their shit together, fast forward another 5 years, and imagine that they're back up to their opening price. You know, it's little things like that. Right now, I'm big on a lot of these are oil, energy. I just sold the WTI one because it actually made me some money. Let me go down there. I don't have it anymore because I'm waiting for it to drop back down. So this one, see, and I sold it just at the right time. So I think I bought it probably like at a low point, and then it goes up, and then I sell it. You know what I mean? And then, okay, I pretty much explained that. You get how it works. You get the principle of how it works. So over here, you go up here, and you got your buying power. Meaning, right now, I don't have that money just set in stocks. I have some of it just sitting in the cuts. You know what I mean? And then the rest and others I have in the portfolio. You know what I mean? And this is how you watch the market. You can link up a bank account. I wish they had it through PayPal, but they don't. Um, let's go. You can go to history, for example. See how I do it? I'm busy with it. And this is with little money. Imagine with big money. You know what I mean? This is how I've been experimenting with how I can make money on a small level. But if I put zeros behind this, then that's where you make the serious money. So really, I'm really kind of new to it, but I'm in it to win it now. I'm like a year in, and I'm like, all right, I know the way this shit works. I know how I can make money. I proved it to myself, by making 40% or whatever. I'm not gonna take up too much of y'all's time. I've probably been running around, but I don't know what else I should go under this. It's free. I think they charge like 1 cent a trade or some low amount like that. But what you got to understand is people who invest, these rich people who invest, they pay somebody else to invest their own fucking money. You know what I mean? And they end up every time they trade, they pay like $5, $6, $7. This app, it kind of empowers you. You got to do the research. You can't go over there and say, hey, here's $6,000, invest my money for me. You do your own research, but at the same time, you don't got to pay the fees that are associated with that. Let's look at this cyan oil. It went up, but it's a lot. But this gives you pretty much the principle. And you look, this is Hooters. Well, it's not Hooters, but the company that owns Hooters. You know what I mean? What else I got here? Let's give one more example of companies that you might have had the foresight of where it was headed. I guess we could take Google. That would be Alphabet, I think is their stock name. Where are they at? When they acquired YouTube and all that, you should have been like, oh man, they're gonna be a powerhouse. Look, where were they at 5 years ago? Even before that, you could have bought it lower. This only gives you 5 years. I'm sure you can look it up on other websites where they were before that. But let's just look at, that seems like a lot of money to buy for a share, right? 434, but look at where they're at now. And let's take a look at some of these war pigs, like I like to call them. Anybody who's involved in military-industrial complex, guarantee they're going to continue. The war is not going to stop. America's been at war since its inception. So the war economy is not going to stop because it's a business, right? Let's look at them over 5 years. Boeing, they're tied to the military, man. They're tied to the military-industrial complex. $118. Where they at now? $385. You getting the point? Boeing, what else? Northrop Grumman, another war pig tied to the military-industrial complex. Where they at? $99 a share. Now it's $320. I can go on. And General Dynamics. That's another one. Military contracts, government contracts. I used to work for them. $80, $79 when it came out, $206. Just look at it like that. So that's pretty much Lockheed Martin. I already did that one, huh? Raytheon, all those companies. So that's pretty much how it works. And you might be mindful of companies that I can't even think about. You know what I mean? Whatever is in your scope, in your realm of knowledge, you might be able to see a trend coming, and that's all it is seeing trends. And putting your money where your mind at, and seeing that company is gonna do well. You don't even gotta work for the motherfucking company, but if you know that they're doing the right thing and you're following up on the business model, on what their plans are for the company, then you'll be all right because you're kind of in the loop, in the mix. So that's pretty much just my introduction to stocks in general. And I don't know if other apps or whatever, if they have something like that. anyone will do, but this one I can testify that it's worked for me, and it's no funny business. Every time I make a trade or sell, I think it's like 1 cent, and that ain't shit. So that pretty much, I'm gonna wrap it up there. I mean, just get at me if you got any. Oh, before I forget, because I know this is gonna be a question, obviously an important question. How do I cash out? Okay, that's a question that my mom asked. How do I cash out? So the way it works is, all right. So let's look at this $40 or whatever in buying power that I got. Right. Once you sell off your stocks or whatever, and you have the $40.69. Look at that as like your bank, right? You got to wait about 4 days until you can cash out on that money. So if you have it linked to a bank account, you cash out and you get your money about, you got to wait about 4 days. Let's say you don't have a bank account like me. I mean, I'm about to get one. That's why I haven't, if you can even have a check mailed to you or whatever, but most likely you're going to have a bank account set up or whatever tied to this. And, that's how you cash out. So, all right, be like, oh man, I made $40 this last week or whatever like that. I'm gonna go ahead and cash that out and continue to play with the money that I got in my portfolio. And then when I make a little money, cash out on that. Or you might, like I'm gonna do, is kind of split it. I might have half of my money where I might be investing in long term and just keeping it like that. And then I might have like some short-term investments and then just cash out on it. You know what I mean? So pretty much 4 days. Your buying power is basically kind of what you got in the cuts, what you kind of got in your little bank, and then you go ahead and cash out that way. So that's pretty much how that works. And then so once you cash out, obviously you ain't gonna have. You might not cash out on all of it. You might just say, oh, I'm just going to cash out on $20 and I'm going to buy another $20 in stocks. However you want to work it. You know what I mean? The way that I'm going to work it is, let's say that on your check, this is the way I'm going to work it. So let's say you get like $717 on your check, right? I'm not gonna be putting all kinds of crazy money into it, because it's more of a long-term investment. Fuck a 401k plan, I mean, you can have that too, but I'm saying if I get $717 on my check, I'll put $17 into this, you know what I mean, into my buying power. Or let's say you say, oh, I'm gonna put $50 out of every check into it as a long-term investment, whatever you choose, but that's the way I'm gonna run it. I get $717 on my check. I'll put $17 into my buying power and then put it into stocks. Half of that short-term investment, half of that long-term investment. And of course, you might see a trend coming, and you might say, "Oh fuck, man! I know this company's gonna do well." For this instance, it's a long-term investment. Fuck it. I'm going to put $500. I'm going to buy 100 shares or whatever and just leave that there. Not even touch it. And like I was explaining earlier, 5 years down the line, you're going to see that savings grow. And of course, it's just like with equity on a home. You can take a little bit out when you need it and leave the rest in there. You can sell 3, 4, 5 shares and say, oh, I need the money right now. Let me go ahead and just sell this. I need the money now. But you still have all them other shares that are just locked in and growing, for the long term. So that's pretty much it.